Is it possible to teach beginners how to invest successfully in the stock market? Yes, of course. Even if you've never heard of PE ratio, balance sheets, EPS, interest rates, dividends, or beta, you can still learn how to invest and invest successfully. Having a large war chest of stocks or being able to pinpoint the next Amazon or GM is not necessary for future wealth. Being familiar with some of the basics will help you avoid making bad decisions with your money. And this video sums up those basics. Number 1. Decide your stock market investment strategy. There are many ways to invest in stocks. Select the option below that best reflects your investment style and how much control you want over the stock selection process. A. Choosing my stocks and mutual funds is something I'd like to do in the future. Keep watching since this video explains all you need to know about stock investments, including choosing the proper account for your needs and comparing them. B. An expert is what I'm looking for to take care of this for me. It's possible that you could benefit from a robo-advisor, a low-cost financial management service. Most large brokerage firms and many independent financial advisors offer these services, which invest your money following your individual goals. C. I'd like to contribute to my company's 401k plan. This is the most typical method for novice investors to get involved in the stock market, making tiny, consistent contributions over time. Keeping an eye on long-term goals and not getting involved are just a few lessons it imparts to new investors. Stock mutual funds are available in most 401k plans, but not individual equities. Number 2. Decide on an investment account. To find an investment account, you need to know what you want. This usually entails opening a brokerage account for those who want to work with their hands. A robo-advisor account is a good alternative for folks who need a little guidance. Both techniques are explained in detail below. Remember that you may start an account with a broker or robo-advisor with very little money. A. Opening a brokerage account on your own. If you want to buy stocks, mutual funds, or other investments quickly and cheaply, an online brokerage account may be your best option. You can open an IRA or taxable brokerage account with a broker if you're already saving enough for retirement through a 401k or another plan through your employment. Brokers should be evaluated based on various criteria, including fees, investing options, and investor education and research. B. Opening an account with a robo-advisor is another way to invest passively. Stock investments are made easier for their owners because they don't have to undertake the labor of picking specific stocks themselves. The services offered by robo-advisors encompass all aspects of investment management. You will be asked about your investment goals throughout the onboarding process, and then a portfolio will be built for you based on that information. Compared to a human investment manager, the management fees below are a fraction of what they would be. In most cases, you'll be paying 0.25% of your account balance to the robo-advisor. If you choose, you can open an IRA with a robo-advisor. Even though robo-advisors are quite inexpensive, be sure to read the fine print and pick your provider carefully before signing up with one. In some cases, cash is required to be held in an account. Because of the low interest rates offered by the providers, investors see a reduction in their returns and an allocation that isn't optimal for them. It is uncommon for these cash allocation positions to be more than 10%. 3. How about the difference between stock and mutual fund investments? Doing it yourself? Don't worry, I'm here to help. Investing in stocks does not need to be difficult. Investing in the stock market typically is a choice between one of these two options. A. Stock mutual funds or exchange-traded funds. Mutual funds allow you to buy a tiny stake in various equities at once. An index fund is a type of mutual fund that tracks an index, for example, by purchasing the stock of the firms that make up the index. Because the fund invests in many companies, you also possess a minor stake in each. You can develop a diversified portfolio by combining many funds. On rare occasions, stock mutual funds are also referred to as equity mutual funds. B. Individual stocks. To get a taste of the stock market, you can purchase a single or a small amount of shares in a specific firm. Individual stock diversification is achievable, but it requires a large investment and a lot of research. If you decide to take it this way, keep in mind that the value of individual stocks will fluctuate. Consider why you decided to invest in a company in the first place. if you get jittery on a bad day while doing your study. Investing in stock mutual funds has the advantage of providing diversification, which reduces your exposure to market fluctuations. Most investors, especially those saving for retirement, should stick to a mutual fund-based investment strategy. Mutual funds, on the other hand, aren't likely to climb as quickly as some individual equities. While picking a good stock can pay off handsomely, the chances of picking a single stock that make you rich are quite low. 4. What is the amount of money required to begin stock investing? The price you can purchase a single share determines how much money you'll need to invest. Stock markets can range from as little as a few dollars to as much as several $1,000s. If you're looking for mutual funds but don't have very much money, an ETF may be your best option. Some ETFs can be purchased for less than $100 a share, because mutual funds often have minimums of $1,000 or more. B. How much should I put into the stock market? The majority of financial counselors prefer that their clients invest in mutual funds. If you have a long-term investment goal, you can commit a considerable amount of your portfolio to stock funds. A 30-year-old saving for retirement may have 80% of their portfolio invested in stock funds and the remainder in bond funds. It's different when it comes to individual stocks. Keep them to a minimum as a general rule of thumb in your investing portfolio. 5. Concentrate on long-term investing. Investing in the stock market has proven to be an excellent strategy for building wealth over the long run. The stock market has returned an average annual return of 10% for several decades. The average market return will fluctuate from year to year, as will the performance of individual stocks. So keep in mind that this is simply an average. It doesn't matter if the stock market is up or down daily or annually. Long-term investors are searching for that long-term average. Some of the most successful investors in the stock market have done little more than stick to the fundamentals of the stock market. As Warren Buffett has famously stated, a low-cost S&P 500 index fund is the best investment most Americans can make. And if you trust the company's long-term growth, you should only invest in individual companies. The finest thing you can do after you start investing in stocks or mutual funds is the hardest thing you can do. Don't look. It won't help if you attempted to avoid monitoring your stocks numerous times a day to see how they are performing, unless they are trying to beat out the odds and succeed at day trading. 6. Organize your stock portfolio. If you are worried about your portfolio's health, you're doing yourself a disservice. However, there are occasions when you need to check on your assets. In the long run, you'll want to evaluate your portfolio several times a year to ensure it's still aligned with your financial objectives. Consider the following. It's a good idea to switch some of your stock assets to safer fixed income investments as you get closer to retirement. Don't be afraid to buy companies or funds from diverse industries if your portfolio is excessively concentrated in a single sector. Finally, don't forget about geographical diversification. Vanguard suggests that up to 40% of your portfolio should be invested in international stocks. You can gain this exposure by investing in mutual funds that invest in international stocks. It can be scary to begin investing when you have no idea what you're doing, but the good news is that plenty of resources for beginners will guide you through the basics and introduce you to some successful strategies. Don't let your fears hold you back. Try out a few simple strategies and see how things pan out. Even if the first few attempts don't go your way, you'll still know more than if you hadn't tried in the first place. Best of luck. Don't forget to give us a thumbs up and subscribe to this channel to take your financial game to the next level.